Back down to Canberra now and follow up on this mid-year budget update, and we're joined by Chris Richardson, of course, from Deloitte Access Economics. And Chris, you were talking to Kieran Gilbert earlier. We'll go through some of the ramifications and assessment of the budget update. But firstly, I thought it'd be interesting to get your take. Given a lot of this is brought about, the slowing economy, the sluggish wage growth, there's international, global factors at play. Where does Australia shape up in terms of our economic performance compared to other developed nations at the moment?
There is a slowdown pretty much all around the world. Australia's seeing a slowdown as well. So far, growth here has held up. Sure, we've slowed, but we are still growing faster than most of the other rich nations around the world. In part, though, that's because we have faster population growth. If you like, that gives us a bit more natural built-in protection than many other nations are able to take advantage of.
Now, tell us then about what are the factors here. For instance, China must be helping us out yet again because the iron ore price is holding up. Our exports of coal and iron are holding up, and that's not entirely, of course, but largely driven by Chinese demand.
Yeah, look, you're absolutely right. We tend to, I'm here in Canberra, we tend to think of the budget as a Canberra thing, made in Canberra. Lots of the ups and downs in the budget come with a big fat made in China stamp. And the unusual thing that we've had over the last 18 months, where the economy weakened a bit, but the budget actually got stronger. The gap between those two, the unusual gap between those two was very much China-driven. As China slowed, it's trying to keep its economy moving by building stuff, which needs steel, which needs Australian coal and iron ore. At the same time, a disaster over in Brazil meant that there was less Brazilian iron ore on the market. Combination meant prices way up for those things, and it helped see the budget improve, even though the economy didn't.
Now, we all know there's nothing better than a pay rise, and there's a lot of frustration around the economy, and Labor have been tapping into this, at the lack of wages growth. It still is tracking just ahead of inflation, so I suppose on average our wages are actually improving in real terms, but it's nothing like we've been used to in times gone by. And I suppose, apart from making the whole economy feel a bit grumpy, this lack of wages growth, and it's been downgraded today in my EFO, impacts on the budget as well, does it? Because it reduces the amount of income tax the government's likely to get?
Yeah, it does. And one of the big write-downs that you saw today was expected take from personal taxes over the next 4 years, down by over $7 billion. The even bigger write-down of the GST is also partly related to weak wages. If people families don't have the money in the first place, then they don't spend it to generate the GST. So yeah, this is a very central thing. It's a global story. All over the world these days, growth tends to show up more in jobs and less in wages than it used to. That's the more in jobs is great news. You heard the Treasurer shout about that today. The flip side is the bad news in wages, and you are quite right. Good news in jobs is good news for a relatively small number of people. Bad news in wages affects the entire electorate. So some of the grumpiness of electorates, not just in Australia but around the world, is off that weakness in wage growth.
The big question, I suppose, that people like you would be pondering, not just today but week in, week out, is whether the issues with wages growth is something permanent in global economies brought on by technology and the digital world, and that we might not see the sort of wages growth that we've seen in the past ever again.
Look, I would hope not. The broad take is, sure, more in jobs, less in wages, may ultimately prove to be a temporary thing. It's more in jobs until you get unemployment low enough to get wages moving faster again, and that might take time, but it does at least hold some hope that you would eventually work your way through this phase. But that's a key difference that we saw today. How soon will it be before wage growth takes off? Treasury might have revised down its expectations of where wages go from here, but they're still rather more optimistic than the Reserve Bank. And the nerd point underneath it, if you like, the Reserve Bank thinks that unemployment today at 5.3% needs to go all the way down to 4.5% before wages particularly move faster. Treasury today said no, they took the old view that unemployment only needs to go to 5% before wages move faster.
It'd be good to test it, wouldn't it? Well, just go to 5 and then see what happens. Go to 4.5, see what happens. I think for the economy and obviously for a lot of people, the lower unemployment is the key. But in many respects, politically for the government, a lot hangs on delivering that surplus. Now, in this year, it's been downgraded by $2 billion to $5 billion. How perilous is that now, given we're only halfway through the financial year? Is there any chance that the government is going to miss this targeted first surplus for more than a decade?
Look, there remains a chance. Budgets are much more volatile than they were a couple of decades ago because they depend on things like iron ore prices and China in a way that they didn't in the old days. If a butterfly lands on the wrong spot in Beijing, bang, the surplus can go. Having said that, I think the government has been deliberately conservative on the budget. They may still, for my money, be a little optimistic for the economy, but I think they're probably a little too pessimistic on the budget. They're assuming that things like the iron ore price go from hero to zero in just a matter of months, and even then they're still seeing a surplus. If it turns out that commodity prices still fall, but not at the same speed that Treasury says, that means that by budget time, the budget and hence the government would have a bit more wriggle room than they're talking about today.
What do you make of Labor's continual calls for more fiscal stimulus? I mean, the government's kept spending under control. That's important. It hasn't really hacked into spending, but it's kept a lid on spending growth in a way that Labor certainly never did. Is there room, is there an argument to forget about the surplus so much, try and inject some money, and would that make the difference we need?
Look, there is an argument. It's essentially the argument the Reserve Bank has been making. It says, well, we need more jobs before we can get wage growth going faster. We, the Reserve Bank, can't get there with interest rates because interest rates are already too low. You, the government, should be doing more, whether it's, say, infrastructure with the states as well or other things. There is that argument. The underlying trade-off, though, you could achieve all sorts of good. You can get an extra 200,000 people in jobs. You can probably increase wage growth by 0.25%. But you would also have less flexibility in the event of the world throwing a recession our way. And that's the trade-off. If we go hard in the way that the Reserve Bank is talking about, we may end up with better outcomes, but we would also have less insurance against a recession. And that's the sort of trade-off that the nation needs to be talking about as we think about that decision.
Now, there's a very big hypothetical that I want to throw your way, and it's about the political contest, but it is actually an important point because Labor are reshaping their economic policies and they'll take a new agenda to the next election. And that hypothetical is, given all this fragility and the slow growth and the need for stimulus, how on earth would Australia be going now if there'd been a change of government and Labor were bringing in an extra $400 billion worth of taxation over the next decade?
Thanks for that question, Chris. First thought, though, is that governments actually matter less for economies than we think. At the last election, there was a bigger difference between the platforms of the two parties than Australia had seen for a couple of decades. But it was still, even with that bigger difference, they were essentially arguing about 3% of the budget. Would it have made a difference? We'd have had higher spending and higher taxes. The higher taxes would have hurt the economy. The higher spending would have helped the economy. I'm not sure it would have made an enormous difference either way. And in particular, again, because politicians tend to overestimate their importance for economies. The important things for economies, things like productivity, how efficiently, it's not who's spending this or who's taxing that. Where's the reform? Where's the cities reform, federal state reform, competition reform, tax reform, all those sort of difficult decisions that would, give us a more prosperous and have done unemployment benefits, a fairer economy over time. Neither side of politics is really biting those bullets. Yeah, spot on. And just finally, in short, what the private sector could do, individuals and companies, is just spend up big for Christmas, right? Yeah, be less scared. Families at the moment, businesses at the moment are too worried about the economy. It's weaker, but it's not that bad. And there's actually a risk that we're so worried about the economy that it becomes a self-fulfilling thing. There's always risks. It's not that bad. Happy Christmas. Spend up.